Good morning, everyone, and welcome to the European crossover webinar. And we did get a little bit of a rebound here in the indices. You can see here as we came off these lows here in the in the Nasdaq, and also including in the S&Ps. And boy, we were stuck at those lows, and we simply couldn't get up there or rebound at the time. Finally, at the very end, we start to rebound and then extend those moves further out. I'm just taking a look here for our economic data for today. Take a look right now. Nothing here in the Eurozone except that we did have German PPI earlier, which came in at up 1.3 tenths. And then as we come into the States, we'll have building permits and housing starts. And that appears to be it. That's all it's going to be, just those two. And I'm going in. I just going to move the things around. The only difference here is I don't have the the whatchamacallit right in here. And the only reason I did that so that I thought it was more important, at least for when I can always look up on that on another screen, but I thought it was easier for me to go in and keep track here because I've already seen what's ever happening here on the footprint. That's why there's a little bit of it. At least it looks a little bit different here. But other than that, that's it. Let's go on and just take, as we like to do, we take just a quick move of where things are at. And Amanda, a couple people were asking. Yeah, I'm still sick, but getting a little bit better from my food poisoning development, whatever you want to call it, with the fish. But anyway, let's go on and take this quick look here with the euro. Just a quick observation here. Certainly coming off those lows here. Now that was surprising when we took that dip yesterday. I thought we'd push even further. There we go. And same thing with cable. Cable looks like we did go and run into some support in here, right here. And the Aussie still extending those moves, but just a little bit lower. And dollar yen, bit of a rebound. And dollar index still holding up really well. We did go and try and we are just above that breakout level. Kind of got stuck there at the 9283. We're kind of pushing a little bit above it here. So let's see how that transpires. One big thing, I did go in and post that I was up in Asia before I went to sleep. Bitcoin did go in and break here. We did finally break 30,000. And take a look here at the 2-hour chart. You can see on the daily, this break here. We actually came down. Remember, we've had that 29,200 that we've been looking at. They didn't get there. They did come down here to this 88%. Let me see where the low was here. 29,000, basically 500. But they are trying to hold up from there. And then yesterday, crude oil really got whacked very hard here. I was even surprised. I was too busy looking at the indices. I knew that we were falling, but I just didn't pay that much attention to it. But I was surprised to see how much it fell. It actually came down here to this. You can see right here in this 65.85. You can see how that comes across all these touches here. Let's move this further on here. Yeah, that's pretty key right there. You can actually but even then, it certainly looked like the whole everything was the wheels were coming off the caboose there. Did get a nice little hammer, and we saw a little bit of fall through, and we kind of pulled back. I think today's bias chart resistance, I think, was around 67.50, but we'll see. But those are the two big movers: overnight Bitcoin and of note, and also the crude oil move. But let's go on and get started with the analysis. So the euro dipped to new lows in the Monday session, but recovered to close near 118. We did make these new lows here. I was surprised we didn't extend beyond that. But recovered to close near 118. The pair may be a bit fatigued on the bear side, although support is going to remain at the weekly level of 1748, but resistance will be at 1850. Obviously, we're still bearish, but we've got that key weekly support at 1748 that we pointed out. Take a look on the weekly chart. There's that 1748. You see that on the weekly chart. And let's go on and move on to the cable. Interesting. Look here on the weekly. We went right down to that support here. Let's take a look at this here. So cable broke down to close at the secondary support level of 36.69 on Monday after tagging 36.50. Support on Tuesday will be 36.24, which that's where I came up with that 36.24 with resistance at 37.63. Well, you can see where it came up right there. Hit right there to the button, 36.24. And you can see here, I was looking as it broke on, like, well, where can it go? And as most of y'all know, although we do have some new people, is that I like to go with whenever I put the bias, the support resistance. I never go with the high and the low. I like to go with the bodies. That always, seems to work best. I always say because when you look at where prices are going, it's what lots of times I call the close is always going to be. You can see right here against this body, and you can see all these wicks touching put up or shut up times. So you'll see a lot of reactions to closes, whether it's a close on an hourly, a daily, a weekly. So when I look down here, I go, where's the next support? Then I look for as many touches as I can get. So when I look on here, you can see the touches coming across all the wicks here, high, high, low, not perfectly, but right there. And you can see here that comes in at 36.24. And lo and behold, the low, although it says 36.34, today was 36.34. But we had today for support 36.24. But on a weekly chart, that's about as close as you can get there. So look here. And that one put right there 25, but I guess the low is interesting because it says here, oh, it says 26 here, although it shows on here that the lowest at 36.34, but here I've got 36.26. Look at that. Interesting. I guess depending on which broker or whatever, I guess you could have a variation, but on the charts it says 36.26. I'm looking here, it says 36.34 for the low. Okay, and then on the upside, well, certainly it's going to be not way up here in the stratosphere. So for there, I'm going to go to a 2-hour chart. See if we can see something here. You can see right there, a rebound here will take us to 36.78. Once again, going through the body. Okay, although considering how far we've fallen, that's not very much to go by. So I'm going to go with, let's see, the wood down here at the bottom, and then you got a little bit of a body here. We'll go right there, which is going to be 37.02. So now let's go and move on to the Aussie dollar. So the Aussie continued its break lower on Monday to 73.19, closing just above the secondary support of 73.24. Support for Tuesday comes in at the weekly level of 72.87, with resistance at 73.84. So I thought it'd be a stretch to get down there, but we'll take a look at it. It's 72.87. This is where I think the market could eventually get to. You see these bodies coming in right there? Right there. There's 72.87, where these two bodies come in right there. Although I think we can get there, considering how much we've fallen, it'd be a bit of a stretch, but that's where we're going to have our support. Maybe by the end of the week, maybe it tags that area. So we're looking at 72.87. And then for resistance, $73.84. We're going to break above it. That's what comes with that 73.84. Would seem a bit of a stretch. If you just go with these two wicks here, I guess we can go with that for now, because you'd still have to take out this high. You see these two wicks coming together, that would put you at 73.67, because 84, that's still 60 pips away. I still think it's still going to remain a little bit weaker. So going with these two wicks there, give us 73.67. And let's go to the dollar yen. So the dollar yen fell to near 109 on Monday before recovering to close at 945. Resistance on Tuesday will be 980. You can see we're almost there, with support at 928. Well, we're trading in a fairly quiet range here. You can see here, but you can see right here that 980, and you can see where I'm coming up with that. See all these touches coming across here? So 980 is going to be resistance. And 928. And for those that are new or watching, I've only seen the webinar a few times. Our bias chart resistance, I know Blake does his for the for the face webinar. The bias chart we do in the European crossover webinar is very short-term oriented. So we're looking for the immediate time we're in, going out to basically 24 to 38 hours. That's why it's so short. So when I'm looking for a rebound, some might say, well, God, this thing can push all the way right back up here to right here, 1031. That seems, that seems more logical where that thing may eventually go to. Yes, but we're looking, our bias chart looks out for the next 24 to 30 hours. So it's very short-term oriented. Let's go and take a look at the cash dollar index. So, doggone it, copy the Bitcoin. Hang on, let me just go to that. I actually sent out an alert, so I already have the thing up. I'll just have to access the dollar index. I don't know how the heck I copied the Bitcoin. That doesn't make any sense. So the dollar index began its breakout above the recent highs as indices fell on Monday. Offers were found at around 93 as the index closed the day right at the breakout level of 92.83. You can see we're above it actually now. Resistance for Tuesday remains 93.26. We still haven't gotten too much further beyond that, with support at 92.32. So let's come down here. And 93.26. We're not going to worry about the 54 for right now since it's struggling to get above that, but at least it's holding. We'll take a little bit closer look here. And you can see right there. We've been pushing up against this, and I thought potentially yesterday we could really blown beyond that. Got to 93.26 and then even pushing up here to 93.54. But as you can see where I'm coming up with the resistance. You see the body close right there? So it's going to be 93.26. But we are holding up fairly well. I mean, we pushed up above it, and we look like we might have gotten in a little bit of trouble, maybe start to ease back, but we are still holding above it here on the cash dollar index. So with that, let's go on and move into Bitcoin. So Bitcoin once again held the 31.5 for the close on, I don't know why that has, because remember it switched it out, which actually, sure that happened. There we go. There we go. So Bitcoin finally caught a daily close below 31,578. Here's a daily close. We had that 31,578, and it's just been sitting there, basically defending it. So finally caught a daily close below 31,578, although there has not been the expected downdraft. Support for Tuesday remains the 2-hour level of 29,200 with resistance at 31,578. Well, here's the 2-hour chart. And there's that support I'm talking about right there. We covered it yesterday. Right there, we'll actually open this here, close back. You can see what right there. You see, has that body right there. So I've got 29,200. We did go to move lower. Actually, 29,730 is the 88% of the overall move of 28,798 here, all the way up here to 36,694. So that's an 88% pullback. I usually don't look at the 88%. Y'all go to the 78%, 61%, or else we move on to extensions. I'm not one that I'll pay attention to. But since we had already broken lower, I was looking for something that was kind of confluence, not only with the 29,200. You can see here, we basically trying to hold up around that area. We're actually 767 right now. So whether that holds up or not, we'll find out in due time. But it's 29,200. And then for resistance, which we had 31,578, let's see if we can find. We really broken pretty good here. Actually, that was with the 30-minute. Go to a 2-hour chart. Even with the 30-minute, there's not. Right there. 30,419. That'll be resistance. And let's go on and move into the S&Ps. Here we are, the move that we saw on the daily. And there's a 2-hour. So the S&P futures continued to break lower throughout the Monday session. Support for Tuesday will be 42.48, and we talked about how important that 42.48 was downside. And as it came back up, I said, hey, it needed to defend that. And I'm talking about intraday. We defended that 42.48. We got up to 42.58, and then we turned around and rolled right back down the hill. Found ourselves, you can see here, there's that move we had. And I was saying in the chat room, as we came back up, I go, if we can get to 42.48, that'll open the door for us to come back to that 58. 58 was key on the down move, although we just went all the way down to 42.48. When we came back to 42.58, and then we just rolled downhill and we just sat there. We continued to go and push higher. This is not too surprising to me on the move back. Once we got away, got the train going, is because it was the move was so strong. I mean, it's strong as far as continuing to not let up. That the rebound, one of the things that I kept saying is, and I thought, I just can't see it making another leg down, but it couldn't get itself moving higher, was because interest rates were so low. Of course, you're going to say, well, of course interest rates are going to be low as you see people move into cash, to offset, the risk. But the 10-year had been falling already. It's already been falling for a long time. But I mean, we'd already seen pretty good slide over the course of over a week and a half or 2 weeks. So we'd fallen so far. I'm thinking, wait a minute, I just can't see another extended move leg lower. And then we finally got the rebound, and then we added on to it. We did get a little bit of pullback here. You can see they went back and tested around this 58, that key area. And here we are pushing back above. So the significance was, as I said, mentioned the 42.48. 42.72 is a key weekly level. And we talked about that before. If you remember in the chat room, last Friday, I said, we're going to go to 43.05, whether it's today or on Monday. And then I said, but they're going to challenge 42.72 for the weekly. Well, I didn't think it was going to get there by, what was it, the Sunday session and start blasting even lower. But you can see here the significance right there, because there's the 42 right there. 42.74 and a quarter, but the weekly level is 42.72. So what? It just gets above by two handles before we pull all the way back to 42.54. And now here we are rebounding. So our resistance today is, I think I put it for 42.82. I think I put 42.72, followed by 42. Let's see, here we go. By 42.88. So we'll go to 42.88. And support. Let's go with 58. This one should be like 62. You can see all the touches there. Comes in at 42.60. I think 42.58. 42.58. Did a break lower than we're looking at that. Potentially 42.42. Beyond that, I still don't see it falling back, but we're going to put that just 42.48 is key, but that's at 42.42. Because if we fall beyond the wheels would come off the caboose. 42.48 is important, but the 42.42, if we get beyond, well, they're going to test the 42.48. They'll probably go a little bit below that, maybe to 46.45. But 42 would be the line at the Alamo right there. If we break that, then we're going to push beyond that. I think eventually we can come back down there. I just don't see it happening now. I think we can get a little bit further rebound here. With that, let's go and move into the NASDAQ. And we're just holding above. But on Sunday evening, we were here at the 14,600, and I thought that was going to be a good rebound area. You can see here they pushed up to 50. They dip back down, dip back down. They're kind of still holding up in here. So as far as resistance, let's take a look here. Looks like we're at there, 14,666. Right there. Oh, look, and 14,655 is at 38%. Mark that on. And for support, I'm going to go to the profile. So the midpoint yesterday was 13,563. Yeah, I like that area there. And it's also some bodies there on that 15-minute chart. So I like 13,563. That actually was a key area too on the way back down from the prior months. That would be key. And looking here at the RTH, 13,573 was the initial balance high from yesterday with the in regular trading hours. So I like that 13,563. And the midpoint was 521 in the regular trading hours with 536. We'll think of that as half back in the regular trading hours would be 4,521. We'll put that as a bit of a, I wouldn't say extreme, but a push here. So there we go. And with that, we're going to move into the gold market. So gold saw follow through from Friday's failed breakout. The metal held the 1794 area before recovering back to 1812. Support on Tuesday will be 1802 with resistance at 1818. So we're just pressing back here. We had 1803, which was good because that's where the market went to yesterday. And then our secondary support was 1792. It got to 1794, so it wasn't too far off that. And then, see right there, 1794. Then we rebounded back, and it actually looks like they have gone. Look at this was actually a 4 chart, which I usually don't like to go. I like a 2-hour chart, but I put that to a 4-hour chart to post it and be able to show it clearly. You can see we actually rebounded all the way back to 1820, and then we've fallen back to 1812. So I had resistance at 1818. You can see here that VWAP has now dipped down to 1817, not that much further, but 1818 is resistance, and that's holding overall. So now let's go move into crude oil. Well, we're starting to slide back here again in crude. Look at that. Crude broke hard on Monday after an agreement by oil-producing countries to increase production, falling to below $66. Support for Tuesday will be $65.85, with resistance at $67.73. Didn't quite make it up there. $65.85. $67.73. Now we'll open this up to get a little bit better look. And we showed that earlier. You can see the significance of that 65.85. Huge support there. So 65.85. If we were to break lower, then you look for the top of these. You see right here, this ridge right there, that I'd be looking for. And actually that ridge happens to go real well with these lows here. We'll back this up for a little bit closer look. Hang on. There. Now you see what I'm talking about. Right there. If we break beyond 65.85, I'd be looking for this ridge right there. You can see that's pretty important. 65.53. So let's go on in. $65.53. And on the upside, it faded. You couldn't even make it up to that 73. See where they ran out of gas. Best rebound price is 54. We'll leave it at 67.73. That's what we had. We'll just leave it at that. So there's the bias chart for today. We're going to get that one posted into the room. And thanks for joining us here on the European Crossover webinar.